Hey there. Hey, are you dreaming of living in a peaceful rural area, but you're kind of worried about down payment for your dream home? Well, you're in luck today because I'm going to share some tips on how to secure a low down payment rural loan. So let's dive into this. I started thinking about this because I had a long drive from North Carolina home, and driving through a lot of rural places in North Carolina really got me thinking like, wow, America's so beautiful. There's so much land, there's so much opportunity, and I can really see why people would want to live in rural properties versus like what I have, which is a huge neighborhood surrounded by a bunch of houses and a bunch of people, a bunch of personalities and everything else. I wanted to kind of share some tips on how to get a USDA loan or a rural loan and what the benefits are. So stay tuned and we'll talk about this. So number one, I would say let's research your options, okay? Just know that there's a lot of specialized loans, especially USDA for rural areas, and you have to really start working with a lender or your housing authority to kind of explore your different options. Knowing your options is really important. Knowing what the qualifications are and just knowing who's going to deliver the best product for you. Because if you think about this, and I've been in this industry for a long time, if you think about this, there's a bunch of different loan officers and then a bunch of different options, okay? If you're qualified, you're entitled to shop with any one of these people or any one of these options that you want. However, it's very, very important to kind of know your options, okay? So if you went to 5 different lenders, I can pretty much guarantee you that 5 different lenders are going to give you a different interpretation of your income because your income has to be taken into consideration, and they're going to give you a different criteria for qualification. So when you're going out there and you have, let's say, a 580 credit score and they're like, hey, I can't do the USDA loan, just know that there are options to do USDA loans down to even as low as a 500 credit score. So definitely explore your options and talk to different people to kind of get you there. And that kind of leads me into consulting your loan officer. Okay, when you're consulting your loan officer, it's really important to know the difference between wholesale and retail, right? Whether you're working a broker or a lender. You're with a broker, we basically shop all the different products, shop all the different investors to find what's important when it comes to product pricing and speed for you. Or you go to that lender who's a direct lender. However, they have an in-house underwriter. That in-house underwriter will underwrite it. They make it sound like it's awesome. However, I think the downfall in all of that, it is awesome because they can talk to the underwriter. They're in probably the same area or in the same company. However, what's not awesome about it is if that underwriter says no, then you're fully denied out of that company. Whereas a broker, if we, let's say, had a hiccup with one company because an underwriter's trying to maintain their license and not have something go into default, we can go into another investor and have them underwrite it. And there's multiple options. So make sure you talk to your loan officer. Make sure you know what the actual pricing is going to be and have them put it in writing. And then finally, whoever you feel comfortable with, work with them, get a couple of comparisons and see who's going to work out best for you when it comes to that product or pricing standpoint. Next is we need to determine eligibility. Determining eligibility is really important. As I kind of alluded to earlier, income qualification is huge, right? With USDA loans, they look at the size of the family, how much assets the family has, and what is the income. Rural loans are they have a standard of income, and if you are over income, you're not going to qualify for this loan. So it's really important to kind of know up front, and you can go into any search engine and you can just put up USDA income limit qualification, and there's going to be the calculator in there, and it's basically, they've gamified it, right? They'll say how many people are in the household, how many people are under the age of 18 and are students, disabled, so on and so forth, and it just kind of rattles off all those different criteria, and then it says what area are you looking in, and then you kind of toggle forward, and they'll say, hey, you qualify for a USDA loan or you qualify for a direct USDA loan, and that's how you kind of determine your eligibility. Now, USDA is one of the most popular loans because with USDA, there's no money down, right? There's no money down. There's a guarantee fee, which is pretty low compared to all the different loan products. And it's going to give you a very good interest rate with less loan level pricing adjustments than, let's say, your conventional loan. Next thing that you really need to do when it comes to doing these loans is look at your credit score. Know what your credit score is. So if you have a credit monitoring app, I highly recommend you use it. With that credit monitoring app, it's gonna tell you if there's any deficiencies on your credit. When you work with your lender, you need to ask your lender if they have a system through their company where they can show you how to like maybe improve your credit score. And sometimes it could just be something really simple. Like, hey, I have a $1,000 credit limit on my credit card. I'm at $510 on the utilization, so you're at 51% utilization. And it could just be as simple as paying $10 on that credit card and having it below 50%. And now your credit score is going to jump significantly because of that. Make sure you're not going late on things. That's also something really important. If you say today, I'm going to buy a home in the next 12 months, you need to start looking at your credit report. You got to see if there are any lates on there. And if there are, you need to work as hard as you can just to make sure that you're at least making the minimum payments on everything so you do not have lates. So I would say set up that auto payment. Setting up the auto payment has saved so many people, including myself, from going late. I'll share a quick story. I was on vacation recently for a couple weeks, and typically I know that all of my bills are due like right around the 20th. Okay, I set it up, from the credit card standpoint that way, and I was having a great time with my family, and it was just something that totally slipped my mind. Thankfully, I have a lot of like these notifications from my credit card companies that are like, hey, David, you're late. And I'm like, oh no, I really didn't mean to do this. So a couple of days ago, I jumped in, I paid the $14 late fee, which is totally out of character for me. And, I was caught up. So thankfully, I had that notification. But when I did that, I said, hey, I need to go ahead and turn on the auto pay like I've always recommended to my customers. Next thing is to make sure you're saving. Okay. You always, even if you have no down payment, you want to save, because when a lender and an underwriter is reviewing your total file, we're looking at a couple different things, okay? We're looking at, hey, is there payment shock? Okay, payment shock is like you have a $1,000 rent payment right now and you're going to $1,300. That's an increase of 30%, right? $1,300 versus $1,000, that's a $300 difference. If you had cash reserves, then we're going to say, you know what? This person is really well positioned, and that's a compensating factor, okay? That means you have shown the ability to save even with that housing payment, or if you don't have a housing payment, it's really important to save. There may be an off chance that you find a house that you truly love and there's 20 offers on it, and that seller is not paying any closing costs. That means you have to pay for the closing cost. However, stay tuned for this little trick. Here's a little trick. Get in a little closer. The little trick is, if your house appraises for a little more on a USDA loan, so let's just say you're buying a house for $100,000 and it appraises for $103,000, you could take that $3,000 and cover some of your closing costs. So if you have that money saved, then you could use the money out of your own pocket. However, if you don't have that money saved, I would definitely, keep that in your back pocket to know that, hey, you can use the difference. And then finally, I think it's really, really important, now that you've kind of identified the lender, is to get pre-approved. Okay, notice I didn't say pre-qualified. Pre-qualified is great. That means, hey, we've reviewed everything. We think you're qualified for the loan. Everything's good. However, we haven't reviewed your documents yet. Okay, so getting pre-approved means we've fully reviewed your documents. We've run everything through the automated underwriting system named GUS, okay, GUS, for USDA loans. And everything kind of looks good, and you're fully qualified to basically go out there and shop. And when your realtor calls us, or the listing realtor on the house that you want to write on calls us, we can say, hey, you are the gold standard. We have fully verified all of your income, assets, and liability documents and ran everything through automated underwriting, and you're good to go. That's what you want. So I hope these tips have really helped you, and thank you for watching this video. I hope you found this video helpful. Don't forget to subscribe to our channel for more valuable tips and tricks, and I'll see you on the next one.